All right, so today we're diving into the world of semiconductors.
Okay.
You've been asking us to take a look at ARM Holdings.
Yeah.
That's NASDAQ,
Mm-hmm.
ARM,
Mm-hmm.
and see if it's really worth all the hype.
Right.
And let me tell you, there is a lot of buzz surrounding this company.
Oh, yeah.
We're talking about the technology behind practically every device you can think of.
Mm-hmm.
Your smartphone,
Yeah.
the navigation system in your car,
Oh, wow.
even some smart appliances are running on their tech.
Yeah, it's amazing. What's really interesting to me about ARM is how they've positioned themselves in the market. So
Yeah.
they don't actually manufacture chips.
Oh, okay.
They design the core technology. Think of it like the blueprint, and then they license that technology out to other companies.
Interesting.
Yeah, it's a super unique business model that's made them incredibly influential in the tech world.
Wow. So you sent over some Wall Street analysis, and it looks like ARM's recent stock performance has been a bit of a roller coaster ride.
Right.
They went public somewhat recently, September 14th. Yeah.
And while the stock's down a bit today,
Okay.
analysts are predicting almost 9% growth over the next year.
Wow.
So should you jump on board?
Well, to understand that, I think we really need to look at why ARM is valued so highly in the first place.
Okay.
You see, they're not just part of the current tech trends. They are deeply embedded in the technologies that are going to shape the future,
Okay.
like artificial intelligence,
Right.
the Internet of Things.
Mm-hmm.
Even self-driving cars rely on their designs.
Wow.
So imagine owning a piece of all that potential. I mean, that's what's got investors so excited about ARM.
I can see why they're excited, but then there's that whole semiconductor sector downturn thing. Isn't that a red
Yeah,
flag?
look, it is a factor, and I think it really highlights the cyclical nature of the semiconductor industry. Their performance is often tied very closely to the overall economy, so when times are good, demand surges.
Right.
But when there's uncertainty, like we're seeing now,
Yeah.
you tend to see a dip. Okay, so how does that play into ARM's current valuation, especially with those, what seem like to me, sky-high PE ratios?
Right.
The analysis mentioned a trailing PE of 269.62.
Yeah, that's high. And here's what that means for the average investor. A PE ratio is essentially a measure of how much investors are willing to pay for every dollar of a company's earnings.
Okay.
So ARM's very high PE ratio.
Yeah.
It means that the market is already pricing in a lot of future growth, which could make it a riskier bet.
So big potential, but maybe a bigger gamble.
Yeah, potentially.
You also mentioned that their financials were interesting. What stood out to you?
Yeah, absolutely. Let's break down some of those numbers.
Uh-huh.
Over the last year, they brought in $3.5 billion in revenue,
Okay.
with a net income, that's their profit,
Right.
of $424 million.
Okay.
Now, here's where it gets really interesting. Their projected revenue growth for this year is over 25%,
Wow.
and their earnings per share are predicted to jump by almost 450%.
Whoa, that's huge.
Yeah.
Are those numbers even realistic?
It does sound almost too good to be true, right? But while these are just projections, they point to the sheer scale of ARM's reach.
Okay.
They're licensing their technology across such diverse sectors. I mean, smartphones,
Right.
cars, data centers.
Yeah.
So even if one area slows down, others can pick up the slack.
So they're playing a high-stakes game, but across multiple tables.
Exactly.
Does that make them less vulnerable to downturns in any one area?
Yeah, I'd say it's like diversification on a massive scale.
Okay.
And that's particularly appealing to investors who are optimistic about long-term technological advancement.
Right. That makes sense. But even with that diversification, are there any specific warning signs investors should be aware of with ARM?
Yeah, that's where I think we need to sort of look beyond those impressive numbers and dig a little deeper.
Okay.
Remember that semiconductor sector downturn we talked about?
Yeah.
That's not something to ignore, even for a company like ARM.
Okay, so even with all those different areas they operate in, they're not immune to a broader market slowdown?
Exactly.
Right.
While their diverse portfolio definitely offers some protection,
Right.
a significant economic downturn could still have an impact on their licensing revenue.
Okay.
If companies postpone new product development or cut back on orders to save money,
Right.
that would ultimately trickle down to ARM.
It's like they're supplying the engines for all these high-tech vehicles,
Right.
but if there's a global fuel shortage, even the best engine won't get you very far.
I like that analogy.
Yeah.
It really highlights how important it is to consider that bigger picture when you're evaluating a company like ARM.
Right.
You have to look beyond their immediate financials and really think about the health of the industries that they supply.
Okay, so how do we do that? What are the indicators we should be paying attention to?
Well, one interesting indicator with ARM is the difference in how much stock insiders and institutional investors own.
You mean the fact that over 88% of the shares are held by insiders like the founders and executives,
Exactly.
while institutions only hold around 6%.
Yeah, it's a really small amount.
Why is that gap significant?
Well, it's a fascinating dynamic, right?
Yeah,
On the one hand, you have these people who know ARM inside and out,
right.
and they're putting their money where their mouth is, which is a
Yeah.
big vote of confidence.
Right.
But on the other hand, you have these large institutional investors who are kind of holding back.
Yeah.
That disconnect is something to watch closely.
Is it a case of them knowing something the rest of us don't, or are they just being cautious?
It's probably a bit of both.
Okay.
Institutional investors often take a more risk-averse approach.
Right.
They're looking for a proven track record,
Right.
which as a newly public company, ARM doesn't really have yet.
Right.
Their hesitation could also reflect a more calculated assessment of the inherent risks in ARM's business model.
Okay. So we've got these kind of mixed signals, high potential, but also those really high PE ratios
Right.
and a hesitant institutional investor base.
Yeah.
What's the average investor to do with all of this information?
Right now, I'd say it's more of a wait-and-see situation.
Okay.
Don't feel pressured to jump in just because everybody's talking about it.
Right.
This is about recognizing a company's long-term potential, not necessarily like a quick profit opportunity.
So maybe not one for the buy today, sell tomorrow crowd.
Exactly.
Okay.
This is about the long game. Keep your eye on those institutional investors, though.
Okay.
They tend to make big moves that can ripple through the market.
So if we see them increasing their positions in arms, that could be a good sign?
Potentially, yeah.
Yeah.
It could signal a growing confidence in the company's long-term prospects.
Okay.
Conversely, if they start selling off their shares,
Yeah.
it might be a time to proceed with a little bit more caution.
It's like they're the trendsetters of Wall Street, and we're just keeping an eye on what they're wearing.
Right.
But beyond watching those big players, what about ARM's financials themselves? What numbers should we be keeping an eye on? Okay, so we're keeping tabs on those institutional investors, but what about ARM's own financial reports? What should we be looking for there?
Well, there are a few key things to watch.
Okay.
First, you want to keep an eye on their quarterly revenue growth.
Mm-hmm.
Is it meeting those high expectations we talked about earlier?
Right.
Second, track their operating margin.
Okay.
That's the profitability of their core operations.
Mm-hmm.
Right now, it's a little low at 5.20%. Seeing that number improve would be a really good sign of increasing efficiency.
Okay, got it. So revenue growth and operating margin. What else?
This one's a bit more nuanced, but pay attention to their licensing model.
Okay.
ARM generates revenue in two main ways:
Mm-hmm.
upfront licensing fees,
Okay.
and then royalties on each chip that ships using their designs.
Okay, so it's like they get paid for the blueprint, and
Exactly.
then they get a cut every time someone builds a house using it.
That's a great way to put it.
Okay.
So watch for any major shifts in that balance.
Right.
Okay? For example, if they start relying more heavily on those upfront fees, it might signal softening demand down the line.
So we're looking for any changes in how they make their money, which could hint at what's ahead. And it's really fascinating to see how these details kind of paint this bigger picture.
Exactly. It's about understanding the story behind the numbers and what that tells us about a company's future.
Speaking of the story behind the numbers, we haven't even touched on their debt situation.
Right.
Their debt-to-equity ratio is remarkably low, isn't it?
It is. It's just 0.04.
Wow.
To put that in perspective, imagine you're opening up that bakery we talked about.
Yeah.
A low debt-to-equity ratio means you've used mostly your own money to start the business,
Okay.
rather than relying heavily on loans.
So you've got a lot of skin in the game.
Exactly. It's a good sign of financial stability.
So ARM is playing it financially safe.
It seems so. And that's attractive to investors who really prioritize long-term stability. And might also explain why those more risk-averse institutional investors are kind of taking their time. They want to see how things play out.
Yeah, it makes sense. Well, listen, we've covered a lot of ground here today. ARM's potential, the risks, those financials,
We really have.
what to watch for.
Yeah.
Any final thoughts before we wrap things up?
I think it's crucial for investors to remember that ARM's story is about more than just their stock price
Okay.
or those financial ratios.
Yeah.
They're at the forefront of a technological revolution.
Mm-hmm.
And while they might not be creating the shiny new gadgets that we all use every day, they are designing the essential building blocks that make those gadgets possible.
Right.
And that's a really powerful position to be in.
It's like they're laying the foundation for the future of technology.
Exactly.
And that impact is undeniable regardless of what happens with their stock in the short term.
Precisely. Their story is worth paying attention to,
Yeah.
even if you never buy a single share.
That's a great point to end on. Sometimes the most valuable insights aren't about making a quick profit, but about understanding the larger forces that are shaping the world.
I couldn't agree more. It's been a pleasure diving into this with you.
Likewise. And to our listeners, we hope you found this deep dive insightful. Remember, knowledge is power, especially in the world of
Yes,
investing.
that's right.
Keep asking those smart questions, and until next time, happy investing.